And I think the most important thing to keep in mind is how long it takes for data to turn into trends, how much data can lag, and how easy it is to take any bit of information that sort of confirms your priors or your hopes and focus on that as opposed to taking a longer, broader view. I think the example that stands out for me is that people have been really focused on the sort of downturn in the trajectory of death rates in the United States, indicating that that's some reason for, diminished worry going forward, when really it really very much is a lagging indicator, one that's already ticking up in hotspot states, and just shows that this is the same virus we've dealt with the whole time, just facing different conditions, and you have to kind of adjust for that whenever you're looking at the data.
Max, when we talk about the data, we're also talking about the renewed federal push for a boost in testing to gauge just how widespread the virus is in the hot spots in the Sun Belt. And yet, the more testing that the United States does, the longer it has been taking to process these tests and get the results back. If anyone goes to their local city MD or whatever you have, and they get that test, it might take 5 days, 6 days. By that time, once you get the results back, it's almost useless, Max. I mean, how big of a policy concern is this?
Oh, it's enormous, and it speaks again to the lag in the data we're seeing, that, anything you're seeing now, even on cases, which is one of the more, real-time pieces of data, even that lags substantially, and it lags much more when there's an acute outbreak. In order to contain the virus, you have to know who has it. People have to know so they can change their behavior. If they're waiting a week for a test, they may just make the natural assumption, unless they're, heavily symptomatic, well, I'm okay. And that's how you get, really broad and concerning community transmission. And especially as we hope over time to return to reopening more broadly, that's when you really have to get a quicker turnaround on tests so people can actually be informed and responsible.
Max, we're told this is about the science, but the approach around the world seems to be different still. It's July, and yet what we see in the United States is different to what we see in Australia, Beijing, where we've had localized shutdowns. Why is the approach so different still, even though everyone's still talking about the same science?
It comes down to the extent to which you listen to that science and the recommendations of public health experts. If different people were setting national policy in the United States and they were, listening to their health experts, we would have policy that was closer to Australia, to China, and would have from the start. I think that's really what it comes down to, because the science generally has a consensus.
Max, this is really important, these statements you're making. I'm going to try to keep the politics out of it as well. There's a sheriff out there, I can't remember the details, folks, but he's just screaming no masks. And just in the last 24 hours, he's turned around to a mask. What would happen to all of this news flow if the president showed up at an event with a mask on? How would that actually change the dialogue or the science, as you put it, Max?
I'd hope it would change it substantially, because this is the thing on which there should probably be the least amount of disagreement. Just wearing a mask when you're in a congregate setting, especially inside. It's just such a small step, and one that data has grown to support more strongly over time as people have had these sort of natural experiments in Germany and in the United States that have provided pretty convincing evidence that on a large scale, masking does work to push the virus. And it's in line with, I think, everyone's priority, which is, getting back to normal, having the most open economy you can through what will still be a significant wait until a vaccine.
And yet, Max, we have to accept that authorities are...
Position opened on euro at 112.791. So I'm long on euro at 112.791.
Mask, cover your face. What happened, Max? How did we all get it so wrong several months ago?
Yeah, no, that was one of the really big errors in health communication from the very start. And I think you can the evidence was a little bit less concrete, and there was a genuine concern about mask shortage. And if you looked at areas that were having more success in containing it, it did give an early indication, and the fact that this was droplet based. That was the principal method of transmission, that masks would have been useful. It's something I wish we got right, but, that's how science works. People update based on evidence, and that's what should inform policy, and it's what should inform behavior rather than, fighting about what happened a few months ago. That did happen. It was a mistake, but it's one that, since we've rectified in communication, and we should use, the data we have, the evidence we have to hopefully convince people that this is something that needs to be a part of daily life for some time to come if you want what we all want, which is to be able to get back to normal life.
Max, appreciate your input. We all want that for sure. Max Neeson there, Bloomberg opinion columnist. Tom, it did happen a few months ago, but quite clearly it's a messaging problem that we're still trying to recover from, not just in America, but elsewhere too.
Well, yeah, it's elsewhere, too. And of course, we see that with a serious infection of the president of Brazil as well. But, John, Tony Crescenzi was going on in the history there on Adam Smith and such. There is a whole heritage in this nation of anti-intellectualism and anti-science that we're living right now.
That's not unique to America, Tom. I can tell you that. That's shared worldwide over the last decade or so. From New York City this morning, good morning to you all. Equity futures unchanged. This is Bloomberg.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Ocular Motor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To accomplish this, we need biomedical engineers, which are here on NJIT campus, computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Wednesday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
In line with government guidelines, face coverings are now compulsory on public transport. At Asda, you can get a 4-pack of Prima disposable face coverings for £2.80, or a 2-pack of washable face coverings from £2.50. Asda, we're all in this together. Selected stores subject to availability.
As shops open up again, how do we all stay safe? Fontaine runs a craft store.
We've made the shop COVID safe. If you can't keep 2 meters apart, make sure it's 1 meter with extra precautions. Know the number of customers allowed in at any one time. Use the hand sanitizer at the entrance and use contactless payments. I'm loving serving customers again, but please, to keep us open, we've all got to keep to the guidelines.
Stay alert. Control the virus. Save lives.
We've got a choppy session this Wednesday morning. Good morning to you all. This is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio, alongside Tom Keene, together with Lisa Bravitz. I'm Jonathan Ferro. In your equity market, we stall out a little bit, unchanged on the S&P. Positive just a single point on the S&P 500. For those of you on the China equity market watch, the CSI 300 stringing together a 7th straight day of gains. Outside of equities, outside of the bond market, look at the gold market today. Briefly through 1,800 on gold. Right now, we're 1,801, and we advance 0.4%. And Tom Keene, as we wait for the Chancellor of the Exchequer, Rishi Sunak in the United Kingdom, to address Parliament, sterling totally unchanged going into this. Cable 125.42.
I'm glad you mentioned it, John. We got 8 ways to go here with our next guest. Ibrahim Rabari's been with us many times with Citigroup and head of economic research for them, working with Catherine Mann and working with a great team, including Edward Morse on petroleum and hydrocarbons. Ibrahim, let me just talk about a greater idea of stimulus in endless debt, even at a low interest rate. Does that just assume currency depreciation or potential devaluation?
Tom and John, it's great to be on once again, and that's a great question. And my short answer is no, it does not. And in fact, that's the point we've been making for our currency forecast, that in many cases, it's the ability to stabilize the economy through these very aggressive stimulus measures that in fact will pull in capital inflows and will be a support for asset prices and therefore also the exchange rate. So I don't think it's generally true that we should assume currency depreciation as a result of these massive liquidity injections. That being said, I think the aggressive actions by the Fed have certainly been one major factor that has made investors more confident to bet on currencies other than the dollar. So I think in the dollar-specific case, they've certainly contributed to the recent sell-off.
On a weighting of the mathematics of this lift in gold, up 25%, folks, off the March lows. Ibrahim Rabari, when you look at gold, do you ascribe it simply to these uncommon low real yields, these literally negative real yields across the entire system? Is that what's driving gold higher?
I think it's certainly a very important factor. And if you look at the charts, you see that the correlation with real yields, and in particular with U.S. real yields, continues to be very strong. And even most recently, if we look at the last few weeks, the latest increase in gold prices has been coming alongside a pretty steep decline in real yields as well. But we do think that there is a second element, which is, if you like, the quantitative part. So you have the price driver, which is on the real interest rate side, but there's a quantitative driver, which is, in fact, again, the massive increase in central bank liquidity. And it is associated with this search for alternatives to the conventional currency. So we think there's kind of this two-pronged pillars of support for gold prices. Very low.
Placing stop on profit for euro at 112.81.1. So stop on profit. On price 112.81.1.
probably not a whole lot of Brexit noise momentum, if you want to call it that. And that may give you this window of sterling normalization. We think of it really more as kind of a bit of a summer window and then renewed downside later this year. But for the time being, it looks like sterling may have found its bottom.
Chancellor Sunak addressing the House of Commons right now, saying we will do all we can to give everyone a chance at getting a job. If you want to follow that address, you can do it live go on the Bloomberg terminal. We'll continue to bring you some of the headlines. The total plan to protect jobs and businesses is worth 160 billion sterling. These are huge numbers, Ibrahim, and they're going to get bigger in the months to come. I think a worry that most people share is that some of the effort over the last several months has done a fantastic job at offsetting the shocks to income. Will we continue to see that collective will to offset the shocks to income through to 2021, or will we transition away from that too quickly and open up an air pocket of consumer demand later this summer? Is that a fear you have, not just for the UK, not just for Europe, but perhaps here in the United States as well?
I think it's certainly a concern, and I would say it's probably my secondary concern. My first sort of concern is that some of these measures just turn out to be insufficiently effective. So in a way, it's more in the direction of we're not doing enough, not because we're doing less over time, but because even more stimulus would have been required over time. But that being said, there's clearly room for policy mistakes. And I think, again, that scope is probably most evident in the U.S., where, we have an expectation but no certainty that phase 4 stimulus will come along. But I think in the UK, too, there are these question marks. And there's a question that you alluded to earlier on, which is how do we transition over time as we're reopening parts of the economy? Are we able to pivot towards something that actually leads us into self-reliant growth as opposed to just making sure that not more jobs are lost in the short term?
Ibrahim Rabbari of Citi, fantastic to catch up with you, sir. What we're seeing play out in the UK right now is just a flavour, an example of what we'll see play out here in the United States in the months to come and worldwide, as fiscal authorities have to continue to underline their commitment to do more to help this economy. We'll bring you more of the headlines from the Chancellor of the Exchequer in the UK as he addresses the House of Commons on what's next. This is Bloomberg.
Not be the last action. It is merely the next in our fight to recover and rebuild after coronavirus. Mr. Speaker, let me now turn to the detail.
With the Bloomberg Business of Sports report, I'm Michael Barr. European soccer clubs expect to lose 4 billion euros or $4.5 billion in revenue over the next year because of the coronavirus pandemic. That's according to a study released by the European Club Association. The ECA estimated clubs in 55 countries face a collective shortfall of $1.8 billion this season and $2.7 billion in the 2020-2021 campaign. Organizers of the 2022 World Cup have become the latest Qatari state entity to cut jobs. The World Cup Organizing Committee did not directly cite the financial impact of the coronavirus pandemic, but officials recently spoke of concerns about the looming global recession. Qatar Airways, a FIFA sponsor, also announced job cuts recently in response to COVID-19 halting travel and shutting sports events. And that's a Bloomberg Business of Sports report. I'm Michael Barr.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Global News 20. When you're facing a problem, like how to make an electric car more efficient, you could sit down and talk it through. But at Honda, we decided to listen to the wind tunnel. With wing mirrors? Or without? Yes. With? No. Without. With. Without. Or with cameras instead of wing mirrors. The new Honda E with wing cameras, not mirrors, because we listen to the wind. Honda, the power of dreams.
What have you missed the most? A haircut? A visit to the shops?
Oh, you look lovely in that.
What about a nice lunch?
Fish and chips, please.
Salt and vinegar with that.
Or an afternoon in a pub garden? Fancy a casual bike ride? Or perhaps something a little more intense? Or maybe you want a relaxing day out. Whatever you've missed, get out there and enjoy it again safely. Find out how at gov.uk/enjoy summer safely.
This is the home that stays in together.
So Flora's things clean in this cloudy weather.
That disinfects doorknobs, floors, baked bean cans.
Fills rooms with fragrance, does meetings in gin jams.
This is a home that cares with pride.
Shares smiles and waves with those either side.
Because this is your London, not inside alone.
But all house proud together, one big beautiful home.
So Flora, killing germs beautifully since 1922.
We're seeing demand for refined product come back in a very good way, very aggressive way. As that demand curve continues to increase, as people begin to get out and about, as the economies continue to open, we're going to see these guys do just fine.
The U.S. Energy Secretary there on the situation in this economy as we struggle to reopen and normalise, not just in the United States, but worldwide. From New York City this morning, good morning to you all. Alongside Tom Keane and Lisa Bravitz, I'm Jonathan Ferro. In your equity market, we bounced back up around about 8 points on the S&P 500, up about 0.25%, following some comments coming from the Chancellor in the UK on the next fiscal steps. And Tom, this is critical. It's all about the evolution of policy. As you go from shutdown to reopen, you go from insulating the economy to stimulating the economy, and you have to try and incentivize the return to work. That is exactly what the United States is going to try and do in the next month, with the administration very much at the centre of that effort. This is what we're hearing from the UK at the moment. They are going to offer a £1,000 bonus per employee for firms bringing staff back. The total retention bonus plan could be £9 billion sterling, Tom. So quite clearly what we're trying to do here is not just offset the shock to income, but also incentivize the return to work. And this is important because it's not just a conversation for the UK, it's what we're about to see play out here in America over the next several weeks.
There's no question about that, and particularly if you take out in America, John, hospitality and such, it's going to be interesting to see how you go from furlough to layoff or from layoff to a job. I mean, it's just going to be an exceptional dynamics, but the key dynamic, folks, is the process in the United Kingdom where the majority government is extremely different than what Kevin Cirilli's going to report on down in Washington. Right now, we want to look at oil. We want to look at hydrocarbons, and one of the great truisms of oil and commodities is you have to hedge your risk along the way. Rebecca Babbins is with CIBC Private Wealth Management. She has a really interesting career with Goldman Sachs, with PIMCO, and now with CIBC of hedging out in hydrocarbons. Rebecca, thank you for joining us. I'm absolutely fascinated at your view and with your experience. If you feel like the oil and gas business is so dead and is never going to come back, doom and gloom and all that, where it's almost worth not hedging. Is that true?
So I don't think that's true, and I'll challenge at least the first premise that the industry itself is dead and gone. I think we saw Warren Buffett make a pretty substantial investment in midstream and oil and gas earlier this week, which unfortunately was somewhat overshadowed by some of the headlines out of the Dakota Access Pipeline blockage. But you still need to actively hedge your commodity exposure if you're investing in energy equities. And you still need to be very, very cautious about how you pick your securities, because there continues to be a bifurcation in the sector of who's going to survive and who's not. There's no doubt the group and the sector is in the middle of a transformation, and it would be completely ignorant to not acknowledge that things are clearly changing. However, that does not mean the sector does not still present significant and compelling opportunities, and always you want to hedge where you can opportunistically across that opportunity set.
Rebecca, I want to get into some of those opportunities and the weeding out of the weaker players from the strong within the shale patch and beyond. But before we do that, we really have to paint the picture and where we are in the supply-demand dynamic. This idea, you are seeing an unprecedented decline in shale output in the United States. You're seeing those output cuts being implemented across the Middle East this month. And yet you also see a sudden decline in demand with gasoline demand lower than people had expected over the key July 4th weekend. Where are we in this balance right now?
Yeah, that's a really great point. So I would say where we are in that balance is the first things you mentioned, which is the fact that demand came back off the lows more quickly than people feared, and we've had supply cuts and OPEC Plus start to really comply with all of their restrictions. That's pretty much priced in and known to the market. What is more uncertain is the second point you made in regards to where we go from here, and that driving data you referenced over the weekend was not spectacular, especially at the peak of summer driving season. I'd also note another data point that came out of United Airlines last night. They walked back some of the flight increases they had said they would put in place for August, saying that they saw lack of demand, particularly in COVID-related states. And thirdly, COVID-related states, California, Texas, and Florida, are the top 3 gas consumption states in the United States, making up over 25% of gas consumption. So as we see cases rise in those states, we might start to see this data that has been fueling the rally to 40-ish in WTI, 43 in Brent start to fade a little bit.
All right, so if this data is a harbinger of what's to come with respect to gasoline demand, how low could you see crude go at this point? And what would that mean in terms of the bankruptcies in the shale patch?
Yeah, so I think the difference between now and maybe the sell-off that we saw in April is the market's much more prepared for maybe some of this data to slow down. And we have, OPEC Plus now all working and singing from the same song sheet. So I don't think you see the type of volatility we saw in April. We could see something trend back to the 30s and in WTI and maybe mid-30s in Brent. However, that does have a significant impact on bankruptcies. I think you will see a larger percentage of companies start to file if we fall into that category across the shale.
I'm moving up my stop on profit for euro to 112.84.1.
The UK right now is the UK laid down a marker for fiscal authorities worldwide as policy has to shift, evolve as we try and reopen these economies and get people back to work. The Chancellor announcing just moments ago a retention bonus plan, basically incentivizing firms to bring employees back. The other issue as well, Tom, as you look at the labour market, is a particular demographic that is going to be hard hit in the months and maybe even years to come. The younger demographic who will find it hard to get experience and get an entry-level job. Something else the UK are looking at doing is a kickstart program to pay firms to hire young people. And I emphasize, Tom, I do think this is a marker for fiscal authorities elsewhere to see how they follow up here as some of these ideas come to the surface as we move forward.
Well, like so many things in this crisis, John, this is something that was there before the pandemic, and the pandemic has just massively accentuated it. I've been talking about this for years, John, about, look at me. Nobody's ever going to retire. I mean, John, you're going to carry me out of here in the surveillance casket. I mean, that's the way it is, and it's tough. It's really tough for young kids. Every household watching and listening knows that.
Hey, Tom. Bit dark, but I will say it would be an honour to carry on working with you through to your
John,
old age, and much longer too.
And what's great about it, John, is it's Tottenham blue. It's just fabulous, the color that they got.
I thought it was Tottenham white, and Tottenham blue is the away shirt. Tom will talk about this later. From New York City this morning, good morning. This is Bloomberg.
For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education,
For the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car, comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel Le Shuttle, a safer way to France and beyond.
At Halfords, we're here to get you where you want to be. We fit car tyres for over 500,000 customers every year. We could fit yours at one of over 350 garages, or even on your driveway with our mobile experts, which means you can safely hit the road again and surprise that special someone.
Happy birthday!
From tyre fittings to MOTs, there really is no job too big or too small. Halfords, for life's journeys.
Are you ready to play?
This summer ITV Hub is fully loaded with loads more full series.
Gonna get messy.
Yeah, like it's fuller than ever. From Love Island to Layer, we have divas lined up back to back.
Filmy and Sister.
From the GC and the Ibiza Weekender reps to the Real Housewives, it's round full of lots and lots of...
This is getting too much now.
Laughs, tears and smiles. It's crammed full with full series like Quiz, Flesh and Blood, Harry's Heroes and Manx in Mumbai. We've grown, expanded and just gone a bit extra this summer.
Give me some on.
ITV Hub fully loaded this summer.
The best experience possible.
Did we mention it's looking fuller than ever?
In line with government guidelines, face coverings are now compulsory on public transport. At Asda, you can get a 4-pack of Prima disposable face coverings for £2.80, or a 2-pack of washable face coverings from £2.50. Asda, we're all in this together. Selected stores subject to availability.
I was offered one.
I was offered one. Were you?
Yeah, I was offered one too.
1 2 1 2. I was offered one.
I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
We've got some of your faves waiting for you on Just Eat. KFC, Burger King and Subway. Spend as much or as little as you like. No minimum spend here. We'll always deliver like a G. I mean, I would know. I'm pretty G myself, thank you very much.
Somebody say, just eat.
T's and C's apply. Selected stores and locations.
Always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
What we're seeing at the moment is the sugar high. It doesn't really tell us anything about what the medium-term trajectory for economies is.
A lot of the data is nonsense. We know that large swathes of the price data are simply being made up. I mean, literally made up.
It's got to be the real economy that performs. Otherwise, none of these companies are going to be able to make it through to 2021.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us. This simulcast on Bloomberg Radio and Bloomberg Television. A most interesting day. It started out boring earlier this morning. It is not boring anymore. A market's a mess this morning. John will do a data check here better than I will. But right now, green on the screen with the NASDAQ 100 up a good 0.5%, really putting it on over the last 30 minutes, even 40 minutes. And John, I'm going to say that the Chancellor of the Exchequer, or the eggshells, whichever it is, the Chancellor giving a speech right now in the United Kingdom really talks about the stimulus to come. And John, that has been the underpinning to a good feeling about this market.
Tom, this is smart policy that we're seeing from the UK, and I think it's important because it sets a marker, lays down a marker for fiscal authorities elsewhere as well. Let's start with the labour market and what the Chancellor is doing today. The Chancellor is incentivising companies to rehire, bring back workers, offering a bonus per employee for every employee these companies bring back. Point one. Point two, they're really trying to help the young, the youth, the companies that are going to rehire these people will want to be incentivized as well. How do you incentivize them? You offer them some money to help hire young people. That's an important step as well. So that's the labour market, Tom. Now we've got to talk about the industries that are getting really beaten up. Restaurants, hospitality, tourism. The Chancellor essentially announcing a tax cut, some tax relief for those particular industries as well. And Tom, this is what we're likely to see in the coming weeks and months outside of the UK as well. Looking to make this fiscal transition as you go from insulating the economy to stimulating it. And the smart policy is to look at the specific areas of this economy you need to stimulate. Point one, rehiring, and point two, the industries that are struggling to normalise. And at the epicenter of that, hospitality and tourism.
And what's fascinating about this, folks, is the process is different in each nation, not just the United States, but every single nation is different from the apparent smoothness that we see in the United Kingdom. Lisa, this goes to the 10-year auction you mentioned earlier that we'll see, I believe, today. And again, the financial system, Lisa Abramowitz, in the United States appears to be running smoothly as we await the next trillion or $1.5 trillion of stimulus.
Running smoothly, another way of saying that yields are at rock bottoms, meaning it's never been cheaper for these governments to borrow money, so why not do it? Raising an existential question of when does debt matter? We've been talking about that throughout the program, but I think that the issue here, as John was talking about very much, is how these are targeted, these programs, and we talked a lot about the enhanced unemployment benefits set to run out at the end of this month, the $600 benefit per individual in addition to the normal unemployment benefits that have enhanced abilities to spend. How much is that going to be the emphasis versus encouraging people to get rehired as the United Kingdom is trying to do, Tom?
Well, it's a lot to talk about today, and part of our good conversation and good with markets elevated. I do want to mention gold out to record highs, $18.15 the ounce at one point on the GC1 that you can find on the Bloomberg. Right now, the perfect guest at the perfect time, Jim Bianco joins us with Bianco Research. He writes an exceptionally eclectic note, filtering in economics, finance, and investment with a great LinkedIn presence as well. Jim Bianco, thank you so much for being with us today. I want you to talk about the confidence you have that these markets, and particularly this equity market, can run as it's been running given the assumption of stimulus. Is that a given?
I think it is a given. I think that that's exactly what's been driving this market. If you look at the virus data, if you look at the stalling of the V recovery, you could really make the case that the economy is plateauing, if not rolling over. But then you throw into the mix that you've got central bank stimulus, promises of bailouts. Look what happened in the UK today. Promises of tax cuts and incentives to hire people. And all that gets washed away. And these markets continue to power higher. That begs the question, what changes this? The only thing that I think changes this is if we were to get an inflation fear and or higher interest rates. As long as rates stay low, governments and central banks can continue this extraordinary action and markets will respond positively.
Jim, I agree with you that monetary policy has exacerbated the trend in valuations, but I think it would be slightly disingenuous of me to say the equity market has not picked up on the stumble in America. If you neutralize the muscle of big tech in America and look at the equal weight S&P 500, Jim, we're down about 10% over the last month. The market is picking up on this a bit, isn't it?
Oh, yeah, it is. I mean, this is not the late 90s bull market of technology where everything is just going to the moon. You're right. There is the FANG stocks plus maybe Tesla and Square and a couple of other names that are really powering higher. But the rest of the market has recovered, well over two-thirds of the previous decline that we had in February and March, and it seems to be holding it up. And that is really the number one thing that's going on. So yeah, looking beyond this, it's not it's not all just wonderful news, but it is still the big story that's pushing this market higher.
And Jim, it's the big story that's pushing the best companies that have a chance of surviving higher. However, others are filing for bankruptcy at an increasing pace. The latest, Brooks Brothers just filing for Chapter 11 is crossing the Bloomberg terminal right now. At what point does the cascade of bankruptcies become a systemic risk, affecting even some of the higher-rated companies that have enjoyed record low borrowing costs, as well as Fed and government support?
I think when the general level of interest rates goes up, when interest rates go up, that is the bond market sending a signal that they're going to reject all of the borrowing and they're afraid that there is inflation. Now, we don't have that right now, so that doesn't seem to be an issue. But on the inflation front, let me offer you one anecdote. Yesterday, Shake Shack reported a 49% same-store sales decline, broken down by a 60% decline in their traffic and an 11% increase in their prices. Now, that's just one example, but you keep repeating that example long enough, and we might, in fact, get that inflation fear that everybody seems to be talking about, and that would show up with the bond market and higher yields, and that would end the game and everything. But again, I'll emphasize that's not happening right now.
Hey, Jim, I love catching up with you, but the line is a little bit flaky, so we're going to have to let you go. Jim Bianco of Bianco Research there. We'll try and get Jim back on the show very, very soon. On this show right now, we are focused on the next fiscal steps worldwide, and we're getting a flavour of how the change will develop in the coming months from the United Kingdom. The Chancellor, Tom, just wrapping up his address to the House of Commons. What we've seen is incentivising rehiring and offering some tax relief, some targeted tax relief to the industries that will struggle to normalise in the months and maybe year to come.
Yeah, there's no question about it, John. But I'm going to go into, John, the idea that we'll see nothing like this out of Washington. Because it's an election year as well, it will be a Donnybrook to see what they do. I would really look for Secretary Mnuchin, the somewhat equivalent to the Chancellor of the Exchequer. I would look for Secretary Mnuchin to really be front and center in this process, driving it forward, given, again, an election year.
There is one point, though, Tom, that I think this administration may well be very well aligned with what the UK is doing this morning, and that is incentivising rehiring. Lisa, from speaking to the administration, there is a reluctance to carry over, extend the enhanced unemployment benefits, but there is a consensus on the need to incentivise rehiring. And I just wonder whether some of the ideas this morning from the UK resonate with fiscal policymakers elsewhere.
The thing I'm struggling with, John, is you have on one hand this idea of how you financially encourage companies to rehire individuals. On the other side, you have the virus, which continues, right? I mean, if people don't want to go to restaurants because they're scared of getting sick, they're not going to go to restaurants even if they have vouchers to do so, and it's half price from Monday to Wednesday in the United Kingdom. And this is sort of the big conundrum here, right?
A close position on euro at 112.84.1. And we got £500 profit.
To really craft an appropriate program around, John.
Well, Lisa, this is why it underlines the need for continued fiscal support. And Tom, ahead of the election that you quite rightly mentioned in November, that is why this administration will have to continue to step up and step in and help various industries still support the shocks to incomes across this nation. Best case, Tom, even amongst the bulls, their best case on unemployment year end is something around 9%. And as you've said repeatedly, 9% unemployment in America, not good enough.
And John, this is really important. I'm so glad you brought this up. The most important number of the week is tomorrow at 8:30, where we really need to see what claims do. This is high-frequency data, and that, will it directly involve the fiscal debate? No, but everyone will be paying attention to how those forecasts change, and they're not going to change off the monthly jobs report. They're going to change off the high-frequency data.
And Tom, what the claims data will speak to, Lisa, is the huge amount of churn that Ellen Zentner of Morgan Stanley last week was addressing. If you look at the net change in jobs, sure, the last couple of months has been positive. Beneath the surface, though, the amount of jobs coming off, the permanent job losses, the claims that are still elevated week after week after week, this is an economy that will still need support.
It's devastating to see the churn, because what that means is that people are moving from just laying off workers in an emergency setting and taking a look at their business and saying it's going to be smaller going forward. I think about the airline industry in particular, John, which has just been trying to accumulate as much cash as they can to survive. But you've seen bankruptcies absolutely surge in this industry, with distressed debt abounding within the airlines. And I do wonder what the world will look like on the other side of this, John.
Smart fiscal policy is going to be crucial, critical, and we got a little flavour of that this morning from the United Kingdom and the British Chancellor. In your equity market right now, around about 1 hour and 19 minutes away from the opening bell, equity futures are slightly elevated, up 5 on the S&P 500. We advance 0.2%. Alongside Tom Keane, together with Lisa Bravis, I'm Jonathan Ferro. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Now with the latest news from New York City and around the world, here's Michael Barr.
Thank you very much, Tom. President Trump is publicly clashing with his top infectious disease specialist, Dr. Anthony Fauci, about the coronavirus pandemic. Bloomberg's Martin DeCaro reports.
After Dr. Fauci warned against falling for what he called a false narrative of a falling death rate, President Trump rebuked him, saying the U.S. is controlling the virus in an interview with Gray Television.
I think we are in a good place. I disagree with him. You know, Dr. Fauci said don't wear masks, and now he says wear them.
Falling rate or not, hundreds of Americans are dying every day from COVID, and Dr. Fauci's imploring the public to look at the whole picture.
There's so many other things that are very dangerous and bad about this virus.
New modeling forecasts the death toll in the U.S. will exceed 200,000 by November unless more people begin wearing masks in public. In Washington, Martin DeCaro, Bloomberg Radio.
China is defending the World Health Organization and lashing out at the U.S. decision to withdraw from the UN body. A foreign ministry spokesperson says the move is another demonstration of the U.S. pursuing unilateralism, withdrawing from groups and breaking contracts. President Trump has harshly criticized the WHO over its response to the coronavirus pandemic and accused it of bowing to Chinese influence. Jacksonville, Florida Mayor Lenny Curry is now self-quarantining with his family after learning he came in contact with someone who tested positive for COVID-19. In Brazil, President Jair Bolsonaro has also tested positive for the virus. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon N.A. Member FDIC.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants, from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Influential conversations from
Decisions. Clearing. Isn't it great? So much choice.
But hey, listening to me on your desktop isn't getting anything done. You need to take this Wednesday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
At Halfords, we're here to get you where you want to be. Why not book an MOT to get you safely back on the road? With over 600,000 carried out every year at 350 garages, you can always count on our experts. And get back to visiting those you've missed the most.
Hi, Mum.
From a safe distance, of course. From MOTs to battery replacements and tyre fittings, there's no job too big or too small. Halfords, for life's journeys.
When you buy tech online and you want to make sure you get exactly what you need, would you rather talk to a robot or to someone called Robert or Derek or Sanjay or Sue or one of our other tech experts on Shop Live, Curry's PC World's online video call experience?
Hi, it's Ali. What are you searching for?
Isn't it nice to get expert advice from another human being before you buy? They're just a click away. Curry's PC World. Talk to our tech experts online with Shop Live.
The rescue package that the president led with bipartisan support in Congress and the PPP that Secretary Mnuchin fostered and implemented, it's the temporary layoffs, John. It's the furloughs that are coming down. We kept people connected to their employers. A lot of temporary layoffs will go back to work.
Larry Kudlow there, the National Economic Council Director, weighing in on the next steps in the United States as fiscal authorities worldwide and their policies come into sharper focus in the month of July. Tom Keenan, your equity market, an hour and 12 minutes away from the opening bell. We advanced just 4, call it 5 points on the S&P 500, up a little more than 1/10%.
Well, there's been a nice move in the market today, certainly a nice rebound off of where we were 2 hours ago. Right now, to drive forward the discussion on stimulus, we have with us a gentleman from the 10th District, North Carolina. Patrick McHenry joins us. He has been steeped in Republican politics going back to George Bush the Younger. He was intimately involved in that successful run for president in 2000. Congressman, thank you so much for joining us today. What is the best outcome for conservative Republicans in this fiscal trajectory of the next 6, 7, and 8 weeks? For those that are frugal and have frugal constituents, what's the best outcome?
Well, I mean, ideological concerns are different when you have a house fire, and what we have is a major house fire here. So we've got to get that righted and then get back on a solid footing here. So for me, I think the approach is how do you get people back in employment in a safe and effective way? So the first piece there is health safety. Without health safety, nothing else matters. So we have to have substantial funds so that we can have a pipeline of treatment options that have been borne out by scientific proof, as well as potentially a vaccine. You get that right, which of course requires a substantial amount of government money with the private sector innovation. And then you get to the question of a rehiring bonus and tax policy that incentivizes businesses to get back in the risk business, to safely reopen, to take the proper risks, and to know that they have a foundation upon which to take that risk. So I think that's really important. So rehiring bonuses would be substantial and helpful, and a tapering down or elimination of these overly generous in major parts of the country federal benefits for unemployment. I think the combination of a bonus for rehiring and tapering down that unemployment benefit would be smart policy.
Congressman, are you getting frustrated by the lack of clarity, the lack of details that you're getting from this administration in the month of July?
Yes. Look, we had a great result with the CARES Act. We saw Pelosi and the House Democrats produce a partisan bill that got no Republican votes. They even lost Democrat votes. It was so far to the left. So that's not a serious point of discussion. What we want to hear is that agenda set so we can have Trump economy 2. We just came off of the best economy in most of our lifetimes. And the policy set that we implemented there gave support to what was happening in the private sector and lifted us to new heights. Let's put that agenda out. Let's be bold about it. Let's hear from the White House on the details so that we can go iron out the policy on the Hill. That's really what I want to hear. And it has been frustrating that we haven't had that detail set yet.
Congressman, why are they dragging their feet? What's the reason behind it at the moment from your standpoint? And is it making it difficult in your constituency to talk to your constituents about why there isn't a plan beyond the month of July?
Well, look, it's complicated because everything has changed. Like the best health experts in the world were saying that summer was going to sort of take this thing down like the flu season. And that was just a couple months ago. We had health experts tell us not to wear masks at the beginning of the year. So the idea that you're going to see 2 months or 3 months in the future in this environment is really hard. So I think there's some understanding that we wanted to be hesitant to just lay out a whole broad policy path before we actually understood the confines of this. Now, we're in July. We need to see that clearly from the administration, and we need to see clearly from states and localities about school reopening, because that's a vital economic set as well. If you can't have child care, it's very difficult for you to get back to some semblance of normal economic life.
Congressman, you're talking about a lack of cohesion and a lack of certainty around what the policies, the specific detailed policies are going to be going forward. And yet you're also, you've admonished Fed Chair Jay Powell for perhaps blurring the lines between monetary and fiscal policy. Some argue that because there hasn't been a faster fiscal policy, it has forced the Federal Reserve to act more and in more varieties that go closer to fiscal policy to make up for that gap. What do you say about that? I mean, do you think that you have been too slow and forced the Fed to act more aggressively?
Not yet. If we screw this up in late July and August, I think that will be the case. But I don't see that. What I was reminding when we have the Secretary of the Treasury before my committee and the Chair of the Federal Reserve, I always remind them that there is this wall between monetary policy and fiscal policy, and the Hill should not get into the weeds of monetary policy, nor should the Fed chair direct fiscal policy. And I got to tell you, Jay Powell gets high marks for his fast action and being very foresighted. His foresight is just absolutely amazing in this environment.
Right.
And when they laid out Main Street lending, it took a long time to get that ramped up, but it was very clear sign to policymakers on the Hill that we've got the lending piece. You guys get in the stimulus piece. You guys get people connected with their employment, and you get people off the unemployment rolls or give them support so they can get back into the economy. And that's something that we hear clearly. So I think they've picked their lane smartly. I think they've stayed in their lane smartly, however, really aggressively. And over the long term, we're going to have these Fed programs pulled back from the economy. But at this stage, we're still trying to put this house fire out.
Congressman, we need to get down to Asheville and do a remote down there. Team surveillance, Asheville, North Carolina. I can see it now. Patrick McHenry, thank you so much. The 10th Congressional District of North Carolina. John, this is so important, and we didn't have time to go into it there, but he is in a district from Asheville over to the east of rural North Carolina, which you just got to say, how is the president and how is Vice President Biden going to do in that district come November?
And Tom, what you got there was just a little bit of a hint, just a little flavor of the division that's slowly emerging, the frustration between Republican congressmen and women at the moment down in Washington, D.C., looking for some leadership on the next fiscal steps and a real lack of clarity on what they might be. And I actually think what he said was smart. Look at tapering the enhanced unemployment benefits, not just letting them expire, and look at incentivizing rehiring. These are the plans we need to see quickly, Tom.
No, there's no question about that. A tapering idea, John, you're dead on about, but it's going to be interesting to see, again, the overlay of the election into this fractured convention season.
From New York City this morning, good morning to you all. Alongside Tom Keaton, Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's BABBEL.com.
This is a Bloomberg. For the friendships, for the fresh air, for the space to grow, for the knowledge, for the sport, for the outdoor education, for the wide horizons, for the academic excellence, for the future. Unleash your child's education at West Buckland School, a co-educational day and boarding school in beautiful North Devon. If you're moving to the southwest for a better quality of life, this is education without compromise, in what the Good Schools Guide called a gem of a school in an exceptional location. To see for yourself, find us at westbuckland.com.
The big Volkswagen event is now on. If you're after a new Volkswagen, we offer to pay your first 3 months finance payments and an additional £500 to £1,000 contribution to your deposit at 3.8% APR representative. Hello, sir. Do any take your fancy?
Well, yes, a new Golf or T-Cross. A Tiguan. No, Passat. Oh, I need to sit down.
Here, have a seat.
The big Volkswagen event. With every type of car on offer, you may have trouble choosing. With Solutions Personal Contract Plan until 12th of July excludes e-Golf at participating retailers only. Minimum 46 months to receive 3 months finance payments. Indemnities may be required. Volkswagen Finance. Contact your local retailer to book an appointment.
Here's to you that learned with homeschooling that your kids are smarter than you. Here's to all the self-taught banana bread bakers. And to you that rocked that very questionable homemade haircut. Costa is giving £3 to everyone that missed us as much as we missed you. Get your £3 in the Costa app today and enjoy a coffee, cake, or snack on us. Come on, you earned it. Terms and conditions apply. For details, visit costa.co.uk/terms.
From New York City, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio. Alongside Tom Keene, together with Lisa Bravitz, I'm Jonathan Ferro, checking in on your equity market around about 1 hour away from the opening bell. Equity futures up 4 points, up a little more than 0.1%. No drama in the equity market, just really quite choppy overnight after a day of losses yesterday. In the bond market, the shape of things as follows for treasuries. They've been really sticky over the last several weeks. Yields lower yesterday, though, higher this morning by not even 2 basis points to 0.66% on a US 10-year. And in foreign exchange, as Chancellor Sunak leads the way in the UK, the pound just a little bit firmer, up by a couple of tenths of 1% against the US dollar, as the Chancellor unveils the next steps for fiscal policy in the United Kingdom, and maybe laying down a marker for fiscal authorities elsewhere as well, including the United States. Tom Keene, we're also on bankruptcy watch. I know you are too. We've seen it from Barney's, Neiman Marcus. We've seen it on Dean and DeLuca, and now we got another one.
Well, you see it nationwide. I don't have those statistics in front of me, but the bankruptcies have exploded, John. And this is Brooks Brothers. They've been on Bloomberg surveillance before. They took great pride in making their ties on Long Island. I've got a couple of them that, frankly, were gifted to me. This one wasn't. This tie I bought September 11th of 2001 at Brooks Brothers in Boston. I only wear it once a year on September 11th. And, John, as well, this suit is not Brooks Brothers. It's made by Oxford of Chicago, but it was patterned off a 1950s box suit of Brooks Brothers. That's what they were famous for years ago, a certain kind of boxy suit. And that's what the suit is paid. They're gone. I mean, you can't believe they're going to go away forever, John. But there is Brooks Brothers now in bankruptcy. As you mentioned, John Barney's and Neiman Marcus as well. Someone who's been, John, a great student of this has been Jeremy Siegel. He is really something. He's at Wharton, but far more. He is at Wharton and, yes, doing investor pundency and, of course, working with Larry Kudlow for years at CNBC. But this is Jeremy Siegel, who worked with Robert Shiller years ago at MIT. He's been a great supply-sider, someone looking at the free markets, as his good friend Robert Shiller has maybe gone a different way. We're thrilled the gentleman from Wharton could join us right now. Professor, thank you so much for joining us as well. Bob Shiller talks about finance and a good society. Is this modern capitalism in pandemic? Is it providing for a good society?
Wow. Didn't expect to be hit by that question as number one. Let's put it this way. Fortunately or unfortunately, I think in some ways unfortunately, the pandemic, the shutdowns have shifted advantage to large corporations. The Targets, the Walmarts, those that are able to stay open, to have the inventory, to provide the necessary protections against the mom-and-pop stores, and they're the ones that are suffering. So, we see the market value of holding up extremely well, while if we had a stock market for mom-and-pop stores, it would be down in the sub-basement right now.
Well, Professor Siegel, this is such an important conversation. I give great credit, folks, to Catherine Mann at Citigroup, formerly at OECD, for really driving forward this debate. Professor Siegel, are we becoming too monopsonistic, where literally there's going to be, all of the 1930s, a la Andrew Mellon, we're going to see a consolidation of companies into bigger and bigger and bigger entities?
Well, there has been this shift. And obviously, you're going to see some of the big companies that have the resources buy the smaller companies. I think that is also true. But I think we also know that we can look beyond this crisis to next year, where I think, I think by very early next year, maybe even by the very end of this year, effective vaccines. And so we're it will come back, but it'll come back with a shift towards the bigger companies having advantage. And, perhaps we, as think of public policy, should think about making sure that small businesses get credits to reopen and not cede all ground to those large retailers.
And Professor, you raise a great question, which is essentially how do we preserve the dynamism of an economy beset by a pandemic, which does seem to be accelerating right now. New Jersey's governor, for example, just ordered all New Jerseyans to wear masks outdoors as they try to prevent the outbreak that does seem to be ticking upward in that state. Professor, what is the consequence on productivity, on growth, on the dynamism of the U.S. economy if there isn't some sort of incentive to sort of sway the power back to smaller businesses a bit more?
Well, there's question of productivity is really a very interesting one I've studied. I actually believe that we're going to see a surge of measured productivity, because I believe, and I mean, there's two sides to this coin, but I think a lot of these people that are being laid off are not going to be hired back, because corporations are going to say, you know what, hey, I didn't need them. I didn't need to incur these expenses. I mean, look what we're talking about, business travel and business meetings, everything. I can do them free on Zoom or whatever, and still produce the output that I did before. And don't forget, that's one measure of that productivity, output per unit input. That's the classic measure. Now, you're talking also about dynamism and in discovery and invention. Let's hope that does not get impeded. I mean, and some of my contacts, in the venture capital world say it's proceeding and money is still available there for innovation, and it is the innovative companies that are still getting plays. So let's hope that stays there, and of course that connects with immigration. I mean, as a professor, we're very worried about some of the recent ICE rulings about if it's all Zoom, students can't stay here because I think international and globalization is a good thing. I mean, there's a lot of very, very good issues in there. Measured productivity as standard actually may increase over the next several years because of this pandemic.
All right, well, let's bring it down then from the 30,000-foot view of wither our economy to the here and now, which is that people are scared for their futures, they're scared for their jobs, and they're stockpiling cash at a record pace. You believe, and you've been reported as saying, that you think this will lead to a boom in consumer spending. Can you square that with this idea that we are going to see a reduction in corporate spending? We are seeing an increase in the slowdown of the U.S. economy.
Well, I was schooled. My first job actually was as a professor at University of Chicago, and I was very honored to be a colleague of Professor Milton Friedman, who won the Nobel Prize on his monetary theory work. And I remember him telling me, he said, Fed expansion is very important, but look at the M1 money supply, which is the supply of bank accounts, of transactions accounts, demand deposits, checking accounts, payroll accounts, and all the rest. And I have seen an explosion like we have not seen in the post-war period. The M1 money supply is up 34% from the first week of March. Now, just to give you a perspective, in the entire year that followed the Lehman crisis, from just before until September of 2010, the money supply was only up 17%, and half of it. And this 34% is just the beginning. As your show, we're going to be putting